Welcome to my weekly look at the gold charts. Thanks for joining me. If you're new to the channel, don't forget to hit that subscribe button as it all helps. Now, is something bubbling up under the surface in the gold market? Is the price about to take off? Well, in today's video, I'm going to dig into the technical analysis to find out. Hello, I'm Stephen Hoad, trader and founder of the Stop Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. First up, some fundamentals and sentiment. Now down the bottom of that chart you can see seasonality, and at the moment it's just pulling off before driving itself up, December time all the way through to spring of next year. Looking above that, the red and black lines, that's our commitment of traders data. The red line is the large commercials, the black line large speculators. We want to see them, we want to see the large commercials doing the inverse of the price and the large speculators tracking the price, and they're doing that to confirm the current price action, which at the moment has sort of moved up above the longer term moving averages and looking a bit more bullish. So onto the weekly line chart for gold. We can see, and the big takeaway this week is I've left on those Fibonacci lines from the previous week's analysis and the yellow box, which was where a lot of the noise and trading activity has really been for the last couple of years. And just take a look at the top of that box, price poking out now above that, and it's the first time that's happened in a while. Is this an important event? Could be. Next upside in the longer term, it's the $2,000 area, and if it fails from here, it's around about down to the bottom of that yellow box, 1688 to 1700, and below that it's that next key important Fibonacci line, 38.2%, around about 1500, but at the moment looking positive. The daily Heikin-Ashi chart also showing some good looking shoots of positivity for gold currently. The two signals at the bottom both bullish, volatility poking up above its longer term moving average to about 13% annual. The volume above that also bullish and breaking up also above its longer term moving average, all giving off, like I say, those shoots of a bit more positivity in gold at the moment. And we head on to that price, then interestingly we can see the price hitting the top of the 2 standard deviation regression band, and historically over last year, once it's got there, it's pulled back down to that mean or if not lower. So a critical point in this current push upwards in price. Can it head up towards that 2000 with some more momentum, or is it going to reverse back towards probably now that 1700 area? Interesting, but at the moment technicals pointing a bit more bullish. On the Renko chart, I've used a $5 block size, and all our signals at the moment are bullish. I've left on the previous week's Fibonacci lines, and interestingly the price has hit the key 38.2% line at the 1866 level, which could create a turning point, which would marry in with the Heikin-Ashi chart and the top of that 2 standard deviation regression band. If it goes on higher, 1900, 1905 next stop, and then into new recent territory, 1930s and 1970s next. But like I said, if it fails here, 1840, then down to 1800 by where that noise of the last month or so has been in terms of price action, and then below that it's 1770 and then 1737, 1740 area. We can also see that we have a buy signal in play from our breakout from the 2 pink line box setup system, and the price is trading above the moving average. So all in all, like I say, positive feel at the moment for the price of gold. I've uprated gold from the previous week to week bullish based purely on the technical analysis indicators. No fundamentals involved in that decision. Now if we look at the targets, focusing on them, actually it's pretty decent both to the up and down sides if you're being a bit more aggressive. Upside 2.4 and 4 to 1, and downsides 2 to 1 and 4 to 1. So sort of a 50-50, sort of play there at the moment in either direction. So I think really if you're going to pick here, you're going to have to measure it in with some fundamental analysis or sentiment or some other factor to marry into the technicals, and help you time your weighing using those. But at the moment, looking weak bullish. A lot can happen in a week's worth of trading, and gold has sort of surprised over the last week, moving up over $70 since last week's report. Whether it can sustain that and move towards 2000, time will tell, and it's got some key important technical barriers to break through, as we saw that 2 standard deviation regression on the Heikin-Ashi chart and the Fibonacci line on the Renko chart. So interesting market to watch over the next week to see whether, like I say, it's got that momentum to push on upwards further. Let me know in those comments below where you think it's going to in the short, medium and long term. Love to hear from you. If you like today's technical analysis, want to learn more, I'll put a link in the description below. If you've liked today's video, please give us a thumbs up. Don't forget to subscribe and hit the bell button to receive future notification of content I will be producing just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.